Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 29, 2022. Let's do a deep dive on Palantir Technologies. Palantir Technologies is a top big data company and they are also into security. So with that, let's deep dive into Palantir. Look, they got a nice platform called Apollo. Apollo helps with the software deployment and software development. Let's deep dive into Palantir and see if it's worth buying up here. All right, so what we'll do is we'll look at Palantir Technologies. We'll start with the background of this company, what they're doing, and then let's look at the competitive landscape. Let's look at the top stocks in the big data area and see where Palantir stacks. And we look at fundamentals of Palantir and see the numbers, see if it's worth buying up here. Then we look at technical analysis, look at the charts and numbers and see if it's worth buying. Finally, we'll conclude with the buy, sell, or a hold rating and go from there. All right, look, from a management or leadership perspective, we got here Mr. Alexander Karp. He has got a good approval rating. It's a 75%, not too bad. And look, he's also a co-founder of the company. I like it when the co-founder is still at the helm. And we also have Stephen Cohen here. He's also a co-founder. So we got two co-founders right at the top. So I think it's really good to have co-founders here. And look, Mr. Karp is one of the co-founder and he has served in various positions since co-founding Palantir. He's got various credentials, as you can see here. He holds a BA. He also went to Stanford for the JD and he has a PhD. Looks like he's got good background here. And he's very flamboyant type character. He does not worry too much about things like gross margin, free cash flow. He just want to build the platform and go from there. That's his forte. He's not too much into all the numbers and this quarterly updates to Wall Street. He's not into those things much. That's one of the reasons stock is suffering, but they're razor focused on the platform itself and they want to improve the platform. All right, now let's jump in here and see what Palantir does. Look, Palantir has got three platforms mainly. They got a Palantir Foundry, and look, Foundry is really helping it's an operating system for the modern enterprise. And it's open architecture and inform closed loop operations. They got data, analytics, and various things. So it's one of the favorite platform here. Foundry, it can help you with all your decision making by looking at the data and informed analytics. And then you got Gotham here. Gotham is a good platform, as you can see here. It's got thousands of users, millions of sensors, and a single pane of glass. That's where this platform excels. And Gotham is also commercially available, and this can really help the corporations. More and more corporations are looking at Gotham of late, but it's a good platform. It can help you. And then finally, we got Apollo. Apollo is really a platform for autonomous software deployment. And, this is really excels in the software development and deployment. So it's top notch in what it does. A lot of companies are using Apollo platform for autonomous deployment. So with that, let's jump in and look at little more details about Palantir. All right, look, Palantir Technologies, they build and deploy software platform for the intelligence community in the United States. They also help with the counter-terrorism investigations. Look, whenever there's a big issue and there is a big counter-terrorism is required, in Afghanistan as an example, Palantir was there. Even now, Palantir may be involved in some of the counter-terrorism activities. That's why this company is a little more secretive. They cannot tell all the details to Wall Street because they are really they cannot reveal some of the secrets. And they got this Palantir Gotham here. This is a platform that enables to identify a pattern hidden deep within the data sets. So it's a good one here. This is where we got the United States government and various government officials. They kind of leverage these platforms to really help with the counterterrorism. Look, stock price is $8.85. It's really fallen down so much. Market cap is about $18 billion. Look at the drop here, year to date, 51% drop. And look, it's 69% from 52-week high. Off late, just in last week, stock went higher, up 9.5%. So look, after the huge big drop here, look at this drop here. Right from somewhere in February 21, stock has been dropping like a rock. But now I can see some base forming here, and stock wants to go higher. So at these levels, I think it's a good one to buy, given stock is down so much. Now it's trying to bounce back. One of the reasons I like this company is, unlike other companies, they got a stable government business. Whether there can be inflation worries and other worries, but the government business normally, they don't worry too much about it. They want this counterterrorism type application or software. They will pay for it. So there's a stable income coming from a government. So that's why we don't need to worry. Look, we got here a news item here. It's one of the exceptional stocks to buy. And it's a good time to buy according to motleyfool.com. And Palantir is also getting into the garbage business. As you can see here, they're working with some garbage companies to really help those companies in the decision making. And overall, looks like company is doing well, but stock is not reflecting the company's progress. Stock is just now started to go in higher. That's when we come in and buy stock and go from there. Look, right now it has got a hold rating from analysts with the 2 buy and 4 hold and 3 sell. This company, because they are focused more on the platform and to improve the platform, not on the Wall Street quarterly basis. That's why stock is not doing well, but the companies are doing very well. All right, now let's jump in and look at the price target. Look, from a price target perspective, the low target is $6, as you can see here. High target is $16. Mid-level target is $11. It's much higher than the current stock price here. I can see the stock easily going to mid-level target, maybe in a couple months or so. And look, right now, both technical rating is neutral and fundamental rating is also neutral from the analysts. So stock is slowly trying to make its way and go higher. That's why it could be a good time to buy some Palantir at this rock bottom price and hold it for a while, wait for a nice bounce back. All right, now let's look at Palantir, look at its competitive landscape. Look, it's got the Apollo platform. Apollo platform is helping many companies. Look, we got big clients like Airbus, and we got here Rio Tinto into minerals. We got Hyundai and Fujitsu, so on and so forth. So it's a good company. Even BP, the oil giant, it's really used by big corporations, as you can see here, including US Army and CDC. So this is a good platform, and let's deep dive into the competitive landscape here. Look, from a competitive landscape perspective, we got big companies, as you can see here. Top-notch player in the data area is Google. As you can see here, Google has been doing very well. And then you got other players like Amazon, Oracle, and so on and so forth. And we got here Palantir right here. Look, Palantir $8 stock, as you can see here, almost $18 billion market cap. And right now, look, its stock is sold off here. RSI is 47, and stock is trying to go higher in 1 day, 5 days. That tells you stock is waking up from its deep sleep here. It's been down for a long time, and overall score is just 19, not so great. And as you see here, keep watch on the RSI. If you want to buy a stock, normally I would recommend buying a quality company with a low RSI. Stocks like Google and Amazon checks out here. Nice overall score as you can see here, but RSI lower means it's a good time to buy. And same story with Salesforce.com. These guys also have got data platform, as many of you know here. And look, overall score is great, 88. You could buy some CRM and take advantage of the drop off here. And then we got Snowflake. Many of you know Snowflake here. Right now it's good time to buy some Snowflake. Snowflake is also waking up from his sleep. It's up 2.5% on last Friday. Look at that RSI here. RSI is low mainly because look, Snowflake is not making money yet. Net margin is 56% negative. And same story with Palantir. Look, net margin is negative. That's one of the reasons Wall Street does not like it. And we got few more players here. Look, we got Mongodb. This used to be a very high flying stock just a couple of months ago. Right now, look at the RSI 41. It's a great stock to buy. I'm sure some of the big corporations might buy Mongodb, given it's doing very well. It's loved by software developers. As you scan through here, we got Taylor. Taylor is also a good one here. You could buy this company also. Right now it's a low RSI, as you can see here. And I got Elastic, one of my favorite stock here. You could buy this great company here. It's down big time, low RSI. And then you got Confluent, one of the good company here. New IPO, you could buy this great company at this time here. Low RSI, as you can see here. All right, let's look at the industry benchmark here. We got Altman Z-score, Piotrowski F-score, and we got comparison with the industry peers, as you can see here. As you look through here, companies like Google, Amazon, all great ones here. Nice industry benchmark here, as you can see here. Look at the growth here. Growth perspective, Google is growing nicely, and they also have nice efficiency, meaning gross margin, net margin, all great here. Great financials. Google is really doing very, very, very well. And Amazon is also okay, but valuation is a little high, as you can see here for Amazon.com. And Oracle is a great one here. It's a really big time down. You could buy some of this stock at these levels. You could see some nice bounce back here. And then you got your Palantir Technologies right here. Look at Palantir. When it comes to industry benchmark here, it's not there yet. It's got nice Piotrowski F-score that tells you books are improving, no need to worry. But rating against the peers is not great here. It's a little bit poor. Valuation is good, but otherwise it's a little bit poor from a rating perspective. That's one of the reasons you cannot compare Palantir to other companies, because they are not too much worried about day to day. They always have long-term focus, and they typically don't do well in these Wall Street conference calls. That's one of the reasons stock is not doing great. All right, so we got a few more, as you can see here. Keep a watch on the overall score also. Higher the better. And we got OTEX. Looks like this one has got great overall score here. You could take a look at this one also here. All right, now let's jump in here and look at a few more. And we got a few more stocks, as you can see here. Look, keep a watch on the RSI as usual here. All these stocks, with the exception of C3AI, which off late is going higher, all these stocks have got low RSI, as you can see here. And go after the stock with nice overall score here. We got VRNT. VRNT has got nice overall score here. You could buy this great company. It's also performed well in the last 5 years. And we got WK, one of my favorite stock here. This is doing very well, as you can see here. Overall 5-year performance is 305%. That's a great performance here. Altorisk, this stock has been down big time, as many of you know here, and right now it's trying to go higher slowly. You could buy this for long term, but that may be some pain in the short term. All right, let's now jump in and look at Palantir in a little more detail. And before that, we got industry benchmark here. We got Altman Z, Piotrowski F, and so on and so forth here. Keep a watch on the Piotrowski F score that tells you if the books are continuously improving. Looks like Teradata has got a nice score here. Nice Piotrowski F score, which is 8. So you could look at this company. Only problem is there are bigger competitors to Teradata. It's one of those legacy type player here. That's why I don't recommend this company. Instead, you could go after stocks like Workovia or VRNT as an example. They will do well. New Relic, on the other hand, stock fell off the cliff last week. It's a big time down. You could buy some New Relic. It typically bounces back nicely, but stock came down big time last week. All right, now let's jump in here and look at Palantir. Look at the snapshot. Look from a snapshot perspective, Palantir Technologies, it's got a hold rating from analysts, and it's making around $528,000 per employee. Not too bad. And from a price to sales ratio perspective, slightly expensive as you can see here. And from a performance perspective, stock has been doing not so great as you see here. It's been down for a long time and down big time from 52-week high. All right, from a sales perspective, $1.6 billion sales, not too bad. And sales growth from a 1 year, quarter-over-quarter perspective, pretty healthy. Top line is great for this company as you can see here. And next year sales growth is respectable, 28%. And next year EPS growth is also respectable as you can see here. And look, company's got good money, $2 billion cash, not bad. And as you can see here, free cash flow is positive. That's also great. And we got R&D investments, which is 378 million. Not too bad. I think they're investing on the R&D, which is always good. And as you scan through here, we got technicals here from a technical perspective. Before you go into technical, look, insiders are selling slightly and institutions are also selling slightly. Not too bad. I've seen much bad numbers here. That's not too bad. And stock has got some short ratio here, about 7%. That tells you this stock can squeeze those short scale sellers and go higher. And as you scan through here, we got your industry rating here. Overall score is 19, which is a little bit low. And look, from a Piotrowski F score, very respectable 7. That tells you books are improving. Financial health is B, which is good. Growth and profitability is C. So with that, I think overall stock is doing well. Top line is good, but the bottom line is where they have to improve. Because right now net margin is negative 30%. They got to improve this situation here. All right, now let's jump in here and look at Palantir by number. Look from a number perspective, I like it. They're improving their earnings. That's always good here, from negative 0.65 to negative 0.27. They are not making earnings yet, but this can change. Maybe in 6 months or so they can make money. And look, top line sales is growing nicely. I like the clip here. There is no issue on the top line sales. They started selling to government in the beginning. Now they're selling to all the commercial business and expanding. I think company is doing well. And from a shares outstanding perspective, there is slight increase here, but this is not too bad. I've seen much worse, dilution here. This company is not diluting much, which is good. Operating margin is improving as you can see here. That's good. Still negative, but it's going in the right direction. Same story, the net margin going in the right direction, and they're also reducing their debt. I like that. So overall, company is doing well. They're doing well when it comes to top line, and they're improving when it comes to bottom line. Not quite profitable, but we can see profitability maybe in a 6 months to 1 year time frame here. So with that, let's jump in here and look at earnings history. Look, from an earnings history perspective, stock has missed EPS twice. As you can see here, they missed by 0.2. And they've been beating on the revenue. That's always good here. Nice clip, the year-over-year revenue increase. That's a nice one here. It was a $289 million revenue company, and it became $446 million revenue company. So top line revenue is growing very nicely, but they don't seem to be worrying too much about the earnings per share. It's a negative right now. They missed 2 times. And if they can improve this situation in next time, stock can go much higher. Look, after the Q2 back in May 9th, stock came down because they gave a, they did not so great, and they also gave a softer guidance. That's why share came down, and it was down to 7.51, all-time low, as you can see here. So it came to 7.32. That's the all-time low. At these levels here, our stock is rebounding. I think it's a good one here. We can pick up some Palantir and hold it for a long time. All right, now let's look at the quarterly number. From a quarterly number perspective, look, stock has been trying to improve. It was $16 billion market cap back in 2020. Now it's about $18 billion. Not too much. Stock is really volatile. It went all the way to, look here, it became $47 billion company, $51 billion company. Now it's back to 18. That's why it's a very volatile company. Not for your retirement account at this time, but it's for active traders who want to buy low and sell high. That it could be for those folks, but it's not a long-term holding for your core retirement type account here. All right, from a sales perspective, look, sales perspective, there is an improvement here, 433 to 446. That's good here. Same here, 392 to 443, 433. I think they're doing very well here. And stock dilution is not much. I would not be worried here. It's a slight dilution. Sales perspective, they're doing very well. Their revenue is exceeding Wall Street expectation. But this is where they, when it comes to earnings per share, that's where company is not making it. Look at the surprise here. They're surprising on the negative side here, which is not liked by Wall Street. They have a nice amount of cash, no need to worry. And total debt is also there, but not too much. Its debt to equity is very, very low here. So no need to worry about financial issues. Company doing very well financially. Free cash flow positive, which is always great. It came down slightly, as you can see here, but still free cash flow positive. Gross margin perspective, it's slight, pressure here, but I think company doing very well. It went down from 79 to 78, but I think overall it's doing very well, healthy gross margin. On the other hand, net margin perspective, look, it's negative, but there is some improvement from negative 36 to negative 22. Not too bad. There is improvement here. They're spending money on R&D. I like it, from 84 to 89. That's good here. And look, from a price to sales perspective, slightly pricey here. It's a little bit higher valuation. But I think at these levels here, you could buy some Palantir and hold it for a while. All right, now let's look at the seasonality here. I love to look at the seasonality of a stock against S&P 500. Look, as you see, look through this year, April and May, seasonally it's a little bit bad for the company. Right now we are exiting May. That's why stock is also going higher. Look, in June, stock typically goes a little bit higher. July, it comes down. Look at the performance in October, November, nice performance here. Even January, it's a nice performance. Typically, this company seems to be doing pretty well second half of the year. So you could start buying up here slightly. And if it comes down in July, you could buy some more. Then you can expect a nice rally, as you can see here. So that's why, I accumulate this company when it's down big time and just hold on to it, and you'll get a nice swing trading opportunity with nice bounce from the lower levels. All right, now let's look at a 5-year chart and look at the technicals. Look, from a chart perspective, this company is not there for 5 years. It's just started back in October 2020 or so. Look, stock has been pretty much very volatile. Went all the way to 45, came down. It's a stabilizing phase, came down here. Now slowly it's trying to make its way higher. I think at this time it could be okay to buy this company here. All right, now let's look at a smaller chart here. It's an 18-month chart. As you look through here, look, stock has been steadily coming down. Now it's stabilizing, which is good. Look here, from an RSI perspective, relative strength index perspective, RSI is trying to go higher, as you can see here. That's a good indication. And then we got here on the balance volume, it's also trying to improve slowly. You can see slight uptick here. And we got historic volatility versus implied volatility. Implied vol is very low compared to historic vol. IV percentile is slightly high. And then we got here DMI. In the DMI chart, look, the blue line wants to go higher. That's a good indication. And the red line is still high, trying to go slightly down, as you can see here. That tells you stock is becoming stronger here and becoming bullish. That's always good indicator. Look, from a check-in money flow perspective, I like it because look here, the money flow is there. The big shorts, hedge fund managers, the funds are buying this company. Smart money is flowing into the stock right now, which is always good. All right, now let's look at the option chain. Let's see what folks are thinking in the options market. Look, stock price is 8.85 and we got all-time high, 52-week high of $29, as you can see here. At $8, which is current price, there's a nice and healthy open interest, 1,668 contracts. As you scan through this list, look, all is out of money. There is nice open interest here. And look at this here, $20. There's a nice 18,000 open interest. That tells you in the option market, people are betting the stock will go higher and they're buying huge amounts of call options at the out of the money call options. There is some volume at the put side also. People are hedging, but it's nowhere compared to the call option volume. Call option volume is so high. All right, now let's look at option statistics here. From an option statistic perspective, look, we got here call options, 136,000 shares. Put options just 40,000 shares. That makes the put call ratio 0.29. That tells you in the options market, people are buying so many call options and put options are very low, very low put options traded. That tells you people are overly bullish in the options market and they want the stock to go higher. All right, now let's jump in here and do a quick conclusion. From a conclusion perspective, look, Palantir is a company to thrive in good times and also in the bad times. So, they build the company and they are really listening to all the feedback. But, they don't worry too much about things like free cash flow. That's why, they don't really care about the quarterly Wall Street earnings and all those things. They want to really build the platform. And because they have got a lot of money and the revenue coming from the government, they're a little bit immune to all these shorter-term inflationary worries. Because the big governments, they want the intelligence products and they will buy it from Palantir. They're not worried about the money. They want to really protect the government. And look, their revenue grew nicely back in Q1 here, up 31%. And commercial revenue, this is more important. This is where the company is pivoting towards, grew nicely, 54%. And even US commercial revenue, that grew very nicely here, 136%. That's a great growth here. So overall, company doing well. They also added 40 new customers. That's a good number. And they are growing the customer count 86% year over year. That tells you companies adding new customers at an accelerating pace, which is always good. And look, they got here artificial intelligence driven platform, which is Gotham. And this seems to be doing very well. And government entities and other companies are using this data and this platform here. And they got Foundry, which help the enterprise customers to make sense out of the data. So as you can see here, they got government business with the Gotham platform, and they got Foundry platform. That's where enterprise customers make sense out of the data. They got a nice balance here. So as you can see, if there is a slowdown in the US economy, and if some of these commercial companies cannot make money, they got the stable money coming from the government. And look, over the past few years, Gotham has been Palantir's driving force. They're really taking the Gotham platform here. That's where they're doing very well in this platform here. Large government contracts wins. Typically that helps a lot here. These are the big government contracts, and they last 4 or 5 years. I think that's a good one here. So that's why I'm not too much worried here. They got the backing from these big government corporations. That's why they will do very well. Look, this whole Gotham platform with the government, that's been the driving force in the past. But going forward, it's the Foundry platform, which is used by a lot of these corporations, and I think they can do very well as you go forward. So they got a solid business, which is Gotham platform, and they got a upcoming business which is doing very well. And this whole platform, I think Foundry can take them to the new highs as we go forward. So that's why it's a balanced business. They got stable business, and they're growing the Foundry. That's the way to go. So at this time, stock is oversold. I recommend buying Palantir at these levels, and you could see a nice acceleration indicated by seasonality of Palantir. Typically it does well toward the second half of the year. So with that, thank you very much. Happy investing and trading. Please subscribe.